I think it depends, Sebastian, on what you're trying to accomplish. I mean, in high finance, the idea of a Sharpe ratio is that you can gear or leverage any alpha and beta into whatever return profile you want, right? So fund manager has 10% annualized returns and 4% annualized volatility. Let's look at this real quick. This is really important. So let's say their return, I don't know, let's call that mu, is 10%, and their vol, we'll call that sigma, is 4%. This is a much, much better fund, okay, than the fund where mu is 22%, which is, wow, that's a lot of outperformance, right? But the sigma is, say, 25%. Because this guy is basically never down, right? So let's say you levered him up 3 times or 2.5 times. You would now have 25% performance, but only to 12% vol, right? So he's got the same returns as this guy, but half the volatility. Right? So all else being equal, you want this guy. Now, position sizing is somewhat indirectly related to this, but it does help you control variance, at least, the volatility. There's a lot of things to think about when it comes to position sizing. You know, we've talked a bit about Kelly criterion, which is probability of right. It's a Bell Labs equation minus the probability of being wrong. Pretty simple equation. So if you think you're 80% right, this is not return adjusted, by the way. So it's not expected value adjusted. If you have an 80% chance of being right on, say, a binary event, you should have a 60% position. So Kelly tends to overestimate. So in any event, there's a lot of ways to do it. There's another ways to gear towards max drawdown. So it actually doesn't matter. We've done the historical return histogram where, you know, if you have a 5% position on a stock where the 1 sigma is 15%, I mean, you're basically saying you're willing to have even just this one component of your stock portfolio is going to contribute possibly as much as 1.5% in daily volatility. That's a fairly big result, right? Imagine your 5% stock is in your favor by 15% or against you by 15%. Your portfolio is going to change by as much as 1.5%. Did I get that right? Or is it 75 basis points? So at least that's just on 1 sigma. It could be, now no stock has a 1 sigma of 15%, but 2 sigma for IonQ is 15%. So, you know, your portfolio will change 1% possibly a day just on for any old reason. So many different ways to think about it. You're really asking a fundamental investing question. Maybe one of the videos that I'm going to make will do a better job on this than off the fly. Yeah, Jordan, you know, some people want that. Some people want a 5-10% daily change in their portfolio. That's a little crazy. And I certainly don't think you want that in the long run. But that's also where the Sortino ratio comes in. You shouldn't really mind upside volatility, right? You should really only want to avoid downside volatility. Now, the two tend to go hand in hand. Oh yeah, I'm very close to recording the first investing lesson. It's going to be pretty well produced, I think. Okay. Oh yeah, automation. There's a lot of human judgment required, a lot of experience. It's tough to really automate too much. I do make some investing software. This software is called Godel, godelterminal.com, which increasingly is helping to automate this type of work. But I'd say you just have to sort of be there. Automating investing is tricky. Nobody's been able to do it really, other than quantitative firms that take relatively short-term positions. So it's been pretty tough to automate stock picking. It's probably one of the highest forms of intellect. I am working on it. But dare I even say I'm at the forefront of it. But it's not easy. For a while, we started working on the problem 2 or 3 years ago, and one of the major problems was context window. So now context window is a lot bigger. But you still have other problems, like needle and haystack or other computational issues. But certainly transformers give you that atomic intelligence that you could use. Yeah, I mean, the GameStop thing isn't that big of a deal. You can deal with that. Yeah. Ryan, yeah, you can try godelterminal.com. That's got that. You could do AMAT if you start from scratch. AMAT F8 FA enter, and you can actually download to Excel or JSON. So we downloaded to Excel. So now I'm going to open the Excel file, and there it is. It's ugly. It's a little ugly, but let me yell at my coworkers. It's really not that useful, Ryan. Investing is a lot more than staring at numbers all day. I mean, it's staring numbers at all day and then thinking about those numbers. Back from the Hamptons. Fix this or you're fucking fired. And again, I want you to spend a lot of time thinking about property, plant, and equipment because it's the soul of business. Again, imagine Andrew Carnegie teleporting from the late 1800s, and he's got a cane and a monocle, and he says, "What businesses do you have in this era, this wild era?" And we say, "Well, there's a software company." And he says, "Yes, well, I was once a big businessman in my era. Tell me about this softwares." "Yes, Mr. Carnegie, your legendary reputation precedes you. You gave us Carnegie Mellon. You gave us Carnegie Hall. let us tell you, he actually built a lot of the libraries in America. And so he says, sorry, I see the automation question. I want to answer that, but I think I also want to tell my Carnegie story. So he says, Carnegie. So Mr. Carnegie says, so we say, Mr. Carnegie, we have a company called Microsoft and Google, and they're software companies. He said, yes, yes. Now, what is softwares? He says, well, you wouldn't understand it because it involves computers, and those are machines. And he says, yes, well, okay, well, let's try this. Tell me, what is the capital of the company? What do you mean by capital, Mr. Carnegie? I mean the equipment, the plant. How much is the plant worth? Mr. Carnegie, there is no plant. He says, what? How is this possible? Where do the men work? I say, oh, the men work, well, it's men and women now these days, Mr. Carnegie, but they work in this building. He says, very good. I shall inspect this building, but where's the plant? Where are the things that are made? Mr. Carnegie, there's not really a thing that's made. He's like, I see. So they are producing, say, a book. Like a book. Yeah, you can think of it like a book. Correct. And anybody can copy this book. Yes, Mr. Carnegie, that's right. Why are people paying for the book? I don't know. I don't know. And that's kind of the idea there. So, Applied Materials has these. Exactly. Why isn't everything covered in soot? Why isn't there any child labor here? Andrew Carnegie was possibly the best businessman of all time. And you can read about him if you'd like. Yeah, can you imagine explaining working from home? Here's the Carnegie biography. He was a beast. Carnegie Steel. Grew up poor as hell. Came to America and went absolutely ham. He's got a little autobiography. I'd take a read. In 1849, Carnegie became a telegraph messenger boy in the Ohio Telegraph Company, making $94 a week. And he busted his ass. He was promoted to an operator. He used the library as a young man to gain alpha, and then he became, look at this Chad. Look at this guy. No homo. Is a very handsome young lad right there. Beast. And he ended up creating more libraries than anybody ever. He was 18 years old. He became a telegraph operator. At the Pennsylvania Railroad. And then he became the superintendent. He invested $500 in a messenger company. They placed a mortgage on their house. kept slowly accumulating capital. And this was the big deal when he did the deal with Pullman. But yeah, he quit railroads to do steel. I propose to take an income no greater than 50,000 per annum. Beyond this, I need ever earn, make no effort to increase my fortune, but spend the surplus each year for benevolent purposes. He had to deal with tariffs. He lobbied for tariffs. He had beef with his coworker Henry Clay Frick. Frick was another figure of this industrialist era. Charles M. Schwab, no relation to Charles R. Schwab. They created a company called U.S. Steel, the first company ever with a 1 billion market cap. There's Carnegie, who was Scottish, so they got him in the kilt. Giving out $100 million given for the public good. Pretty cool. 1903 cartoon. $3,000 public libraries. About as based as it gets. Carnegie Mellon University. And so forth. When we're back, we're going to talk about applied materials, and I will be back just in less than a minute. Maybe 2 minutes?